to On the Money right here on WDBO, AM 580, always streaming inside your very own WDBO app. This is On the Money. My name is Josh McCarthy. So happy to be sitting here with Joe Bert and Nancy Hecht, two certified financial planners with the Certified Financial Group. Joe, Nancy, how are we doing this day?
We're doing great, Josh. Good to be with you. As we say in the intro, Nancy and I are here to take questions that might be in our listeners' minds, things that you might be thinking about regarding your IRA, 401k, long-term health care, stocks, bonds, mutual funds, real estate, all the things that Nancy and I and the 14 other certified financial planners deal with day in, day out, trying to get our clients to and through their retirement years. On Monday through Friday, we work for a fee as fiduciaries, but on Saturday morning, we are here for you absolutely free. So if there's anything on your mind, things you might be thinking about, things you think your brother-in-law might have said that just don't sound quite right, we're here to clean up the mind fog. So the good news for you is the lines are absolutely wide open. All you have to do is pick up the phone and dial these magic numbers.
844-580-9326, 844-580 WDBO. We also have the open mic option inside your WDBO app. Open up that app, find the open mic section, hit record, and we'll push play as if you're sitting here in studio or on the couch with Joe and Nancy. Today's topic is 4 decades of change, how the markets have evolved.
So what brought this to mind is a mere 43 years ago, I met my husband, Dean, and we are soon to be celebrating our 40th anniversary. And I met him at a mutual fund company that we both worked for 5 years before I joined Certified Financial Group. Short 5-year period of time in these 43 years where he was actually my boss.
Are you telling me the tables have turned?
I guess you'd have to ask other people, but so a lot has gone on, and people think about 2008 as a market crash, and that's all they think about lately. So I said, I wonder what kinds of things have happened, big moves in the markets, either up or down, over, these 40 years that we've been married and, trying to navigate life together, and the various different things that have impacted things that we have wanted to do and as my clients have wanted to do. So we got married in 86, obviously, and, we're looking for a place to live and trying to find a house to buy. And a mere, 11 months after we got married, we had Black Monday. Do you remember Black Monday?
I remember it well. Yep.
October 1987,
right.
The Dow Jones suffered a staggering 22% drop in one single trading session.
Right.
And it's still the largest one-day percentage drop in stock market history.
I remember well.
Yeah.
So equivalent to this 22% on the Dow, that'd be 11,000, 12,000 points.
Yeah.
Yep. So,
Yeah.
Yep.
So it's all relative. So we ended up 2 years after that finding our first home to buy. And I know that people today are complaining about interest rates and housing prices and things like that. We are in our second home that we've owned in all the years we've been together. Both of the homes that we bought were repos. I grew up in a construction family, so the fear of having to work on something was no big deal as far as I was concerned. But when we bought our first house in 89, we were lucky to only have to pay 10% in interest rate on a mortgage.
I remember those days.
And I know people are not happy now with having to pay, 6%? As opposed to 2 or 3 that they were paying a number of years ago. So, I mean, I still think 6% is not so bad. I mean, when I meet with clients that are thinking, should I pay off my mortgage, and they have an interest rate that's between 2 and 3%, to me, that's cheap money. And if you have extra dollars that you can apply elsewhere, maybe paying off a higher interest rate debt or putting a little bit more towards your own retirement, I think that that's valid because the rates are so low. Another big stock market move or fear that you can think about as a dot-com bubble. Do you remember all the stuff that we were doing at the end of 1999? Because we had no idea what was going to happen when the computers turned over and we weren't sure if things were going to work.
I remember well, we all bought new computers, double check the software, try to shut everything down, waiting for the clock to tick, waiting for the planes to fall out of the sky and the elevators to crash, and the ball dropped, and here we are in 2000.
And really, nothing happened.
No.
Actually, what happened that was big in that period of time is the NASDAQ went up in March of 2000, 78%. That was the beginning of a 2.5-year climb for the NASDAQ.
Yep.
And people really didn't pay attention to the NASDAQ that much until then. It was the Dow and the S&P.
Everything with a .com at it was a next road to riches, and everybody had to have it. And then,
Right.
And then what happened?
And we're seeing still today on the .com type of vein, companies like NVIDIA are really the tail that are wagging the dog as far as the markets go.
But the good news is those companies are at least are making money, and unlike the crazy things are out there, anything that had .com after it.
Right. People were going crazy for that.
Yep.
So the next big thing that we had to look at was the global financial crisis. This was from 2007 to 2009. And it was the subprime mortgage. If you think of that, the bond market debacle and Lehman Brothers falling and all that big news. So that was really a tough time for people that were trying to buy houses. The S&P went down 57% from its peak in March in 2009, and leading to what was called the Great Recession.
Well, you had people that were overextended on real estate. Real estate was the greatest thing to own. And you could buy a house, you could buy investment property if you could just fog a mortgage, and fog a mirror, and you got a mortgage. And how many rental properties do people have, thinking that was the way to go to prosperity? And then the bottom falls out, and you're stuck with this real estate. You have all these foreclosures, and that's what the wheels began to come off the car.
And there was a shift change when we used to do partnerships. The things that we did in the beginning were all cash programs, where no property was bought unless they had all cash to pay for it. So the fact of not having debt, I thought, was great. And when they started adding leverage or mortgaging stuff, and then it got up to be like 78%, or 70 to 80% leverage. I mean, that kind of stuff started to get a little bit very risky.
Well, anytime you add debt to the equation, it can accelerate the game, and it can also accelerate the losses.
Right.
I mean, we've got that going on now with some of these leverage ETFs.
Right.
When the market's great, you're making a lot of money, but all market turns and you're losing it real fast. So, once again, that's just an example of having debt in any kind of portfolio.
And the point that you just brought up, I think, is really important when looking at, reviewing assets with our clients. Every day we're seeing things going up and down and up and down. And just because the value of the investments may be moving down, if it's a quality investment, quality prevails and it will come back. And just because there's a little bit of a decline in value does not mean that you've taken a loss unless you have actually sold something. Right. And that's something that I'm constantly reviewing with my clients.
Well, that's why you want to have liquidity in your portfolio for when the time the market goes down, you don't have to sell something when it's down. And so if you're fully invested, totally 100% invested in equities, it's great when the market's doing well, but when you need that money and the market's not doing well, this is when you're forced to sell and unfortunately realize loss. And that's what planning is all about.
Yes, most definitely. A big part of what we do. Do you remember the flash crash?
Oh, yeah. I remember exactly where I was. I was down at a conference down at the Ritz, and I was with our old friend Jim Hackadori, and all of a sudden, what is going on?
Yeah.
With a bunch of other investment people, everybody got their phones, and that the world was coming to an end. Yep.
The Dow went down 1,000 points within a matter of minutes. And it again, value declined $1 million. If people had not sold their holdings, then they did not take any losses because it recovered relatively quickly. So, and then there was another thing I found, and I'm going to go back a couple of years, that people don't think about or don't remember. It was the 2008 Volkswagen shortage.
I don't remember that.
Okay.
2008 Volkswagen?
2008.
Okay,
Yeah.
just around the financial crisis started.
So Porsche, or Porsche, however you pronounce it, acquired VW. It became the most valuable company in the world, and the stock spiked over 400% in a matter of days. And there was a lot of hedge funds bets on that, which, you know, they ended up losing, and because a lot of people were shorting this stock. But it was just this massive spike in it.
Why was it called a Volkswagen shortage?
The Volkswagen's, I don't know, short squeeze.
Okay.
So,
yeah, that's what it was. That's why it's why they lost money. Okay, got it.
So that was interesting.
Got it.
And then, of course, you know, COVID.
Oh. Boy, that seems like a lifetime ago, doesn't it?
Well, I guess it
It
depends.
was to me. I mean, I can still remember you and I and everybody else walking around here with masks and wiping off door handles. And
Yeah.
when we used to take temperatures of everybody, walked in the office.
Yeah,
And,
it was.
and then we walked around like twice a day taking everybody's temperature, and we had to record it. Oh, my God.
I was so happy that we were deemed essential and I was not stuck in my house.
Yeah.
And many of our clients that came in were so happy that they had a safe place that they could go and get out of their own house.
Yeah.
So,
Yeah.
but from an economic standpoint, we had a very fast bear market in that time. In a matter of weeks, the markets overall, the Dow, the S&P, and the NASDAQ dropped over 30%. And I mean, I look at something like that as a buying opportunity. I love to buy on sale. I mean, over this past week, we had from Wednesday of last week through, I think, Tuesday of this week, we had 5 trading days in a row where things were negative. And I do what I call trolling for cash. And I look at the cash balances in my clients' accounts to see, you know, where can I put money.
An opportunity.
All right, so one more thing we'll talk about on the other side of it as far as market movements go, because I hear the music.
Take it away, Josh.
Thank you so much, Nancy and Joe. If you want to call in, open lines available for you, 844-580-9326. Just had an open mic come in. We'll play that one out of the break here. If you want to join the conversation,
These are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, you know, I got 200 grand, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
40 years ago, I had a dream.
CFG has been chosen once again as one of the top 100 financial advisory firms by CNBC out of nearly 40,000. And because they won't divulge the selection criteria, asked my colleagues what they thought.
Maybe it's because our history dates back almost 50 years.
Could be because we're independent, but we custody with national firms like Fidelity and others.
17 CFP professionals under one roof.
Or it could be because we're CFEX certified.
And a real person answers the phone.
In any case, we're proud to have been selected. So if you're looking for financial planning or investment advice for a fee, look us up online.
You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I need to, I'm barbecuing this weekend, right? What do you like? And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal, oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak, just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit, it's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy, your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyota.
I invite you to open up those phones. 844-580-9326 is the number to call and have your answer question live on the air. 844-580-WDBO. You're also more than welcome to send in an open mic using our free WDBO app. Open up that app, find the open mic button, find the record button, push record, and it sounds like this.
Good morning. I'm wondering if there are ever situations to where your firm does recommend annuities, because I hear on the radio for your advertisements that you always say you will not offer annuities, but I'm just wondering if there are certain situations to where those are best for the client. Love listening to your show. Thank you.
Well, thanks for the call. I think that the ad that she's referencing, it's specific to that workshop. that Joe mentions in the ad that we will not be offering annuities. If I can give my opinion on why we don't offer, or I particularly don't like individual annuities at the moment, right, is years ago, when I was providing annuities to my clients, they had surrender charges that lasted for 4 or 5 years, and that was it. And a surrender charge is if you have to, for some reason, liquidate, you have to pay a penalty. Those charges now go out 10 or 15 years and are a huge expense and a hindrance to liquidity for clients. And then those old annuities also offered whatever the investment experience was, or somewhere between 5 and 7% annual rate of return, whichever was greater. So those were two really nice features that were available. And liquidity, to me, is really important, and not having to pay to get your money. But there are situations where some annuities or annuity features within something else could be beneficial. For example, one of the long-term care contracts that I like to use has an annuity feature available to it, where the cash accumulates at the current federal funds rate. So it's not a huge...
but it's like a CD.
Right. It's not a huge... It grows tax-deferred, and the clients always have 100% rights to the cash that is in the account.
And on top of that, they get long-term health care.
Right. Long-term health care, or God forbid, or if they pass away without needing long-term care, then there's death benefit that goes along with it. I just had a client ask me about a QLAC, which was a qualified, I can't remember what the LAC is for. It's a way of providing a fixed retirement income to yourself by using some of your qualified retirement dollars and moving them into an annuity that will pay a life income.
Qualified life annuity.
Qualified life income to the clients. Mm-hmm. Which could be, on one hand, really nice to know that you're going to get a fixed monthly deposit for your life. On the other hand, you're giving up complete liquidity of your whatever retirement assets you move into that program. And I have an issue with that.
No, I agree with you. And there's a lot more to annuities than just, you can't say all annuities are bad. The ones you want to stay away from are the ones that they offer at these dinner seminars. We got a proposal or an inquiry a while back. We were always contacted by these wholesalers who want us to sell their product. Mm-hmm. The ones out there just hearing about 20% bonus. Put your money in. It pays a 31% first-year commission. But in order for us to get that commission, the client has to tie up their money for, as you say, for forever.
Yeah.
And so stay away from that bonus kind of stuff. Stay away from they promise you all this stuff. The best annuities are those that kind of look like a CD that has a modest rate of return. And fortunately, we have annuities today that don't have any commissions. Totally liquid. You can put your money in today, take it out tomorrow, and get all the benefits of an annuity. So annuities in and of themselves aren't bad, but be sure you're not trying to put a square peg in a round hole. And the reason we say we don't sell annuities, we're not be talking about annuities, is because we don't want you to think it's one of those dinner kind of seminars. We're going to show you how an annuity does everything. So,
good question. Thank you for allowing us to clarify.
Thank you so much.
Has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in, you say, hey, Lou, I need to, I'm barbecuing this weekend, right? What do you like? And Lou goes to, the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal, oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak, just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit, it's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. That simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, I got 200 grand, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
40 years ago, I had a dream.
CFG has been chosen once again as one of the top 100 financial advisory firms by CNBC of nearly 40,000. And because they won't divulge the selection criteria, asked my colleagues what they thought.
Maybe it's because our history dates back almost 50 years.
Could be because we're independent, but we custody with national firms like Fidelity and others.
17 CFP professionals under one roof.
Or it could be because we're CFEX certified.
And a real person answers the phone.
In any case, we're proud to have been selected. So if you're looking for financial planning or investment advice for a fee, look us up online. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the
This hour was paid for by the host and does not reflect the opinion of WDBO. Welcome back to On the Money, Central Florida's most listened to financial call-in show, brought to you by Certified Financial Group in Altamont Springs. It's the only show hosted exclusively by certified financial planner professionals. Monday through Friday, their CFPs provide financial planning and investment advice for a fee. But on Saturdays, the advice is absolutely free. and has been for more than 30 years for their WDBO listeners. If you have a financial question you want answered by real fiduciaries, the lines are wide open. Call 844-580-WDBO. That's 844-580-WDBO. And enjoy the rest of the show. Welcome back to On the Money here on WDBO AM 580, always streaming inside your WDBO app. We got Nancy Hecht and Joe Bert, two certified financial planners with the Certified Financial Group, hosting this here hour of On the Money. My name is Josh McCarthy, being the professional middleman between your questions and their answers. If you've got a question for Nancy or Joe, we got some open lines available for you. 844-580-9326, 844-580-WDBO. You're also more than welcome to send in your open mic using our free WDBO app. And right now, we do have Charles Curry, who's taking your calls off the air, a third certified financial planner with the Certified Financial Group. He's taking your calls at 407-869-9800. Maybe you got a question that gets right to your finances and you want to just go right to the four walls of the Certified Financial Group. Charles Curry available to you, 407-869-9800. Nancy, Joe, I think we got a little bit more of our original topic to wrap up.
Yes.
Do a quick recap.
Okay, so, we started with Black Monday in 1987, and then the dot-com bubble, global financial crisis. Most people think of it as the bond markets falling from 2007 to 2009. And then we talked about COVID-19. So when I'm reviewing with my clients, right now, I ask most of them if they remember what happened in 2022. And I get a puzzled look. But most equity markets were negative anywhere from 22 to 42% in 2022. And then in 2023, everything came back anywhere from 24 to 54%. And again, just because the markets went down, I did not sell holdings for my clients. And so they just saw the value go down and then they saw it go back up again. And that's, what's important about us doing the hand-holding for our clients and reviewing and explaining in plain English exactly how all this stuff is working to make sure that they have successful retirements and legacies for their families.
You know what I find interesting? When we have market corrections, like you just mentioned, those kinds of things, we will go out into public, maybe social gatherings, and when that happens, people know their business well. And first comment you get, I bet your phone is ringing off the hook. I bet your clients are calling. And it doesn't happen here.
No.
It does not happen.
And that's because we keep in regular contact with our clients, and that makes a huge difference. And that's a difference between, managing clients for investments for our clients as opposed to how the first 5 years I was in business, I had to sell stuff. So. Anyways.
So one more point on wrapping things up.
That was it. That was it. Okay. Yeah, 2022. That was it. So, and Josh, I thought you said we had another open mic.
We sure do. If you want to send in your mic, you can do so. Open up that WDBO app and send it on in. Find the open mic section and you can send it in at the bottom. Here we go with our latest open mic.
Good morning. I've been blessed to have the last 3 homes that I've purchased make approximately $100,000 of profit, and just recently sold my last home and have about $350 cash out, and I'm getting ready to buy a house for $300. Do I pay cash for it or do a conventional loan?
It all depends.
Well, I would want to know how old of a person this gentleman is, and then what other types of obligations they have.
How long they plan to live in the house?
Right. Yes, and how long they plan on living there. I mean, if you plan it, if this next purchase is going to be it, why not pay cash for it?
Well, it depends on what your other liquidity needs are.
Right.
What other assets you have to generate income when you retire.
and how much is the next house going to be versus the 350 in profit that this gentleman's going to have.
Right.
I'd also would want to, know and probably assume that this gentleman has enough in emergency fund assets. So that's looking at checking, savings, money markets that would cover any type of emergency that could come up over the next 18 to 24 months. That's money that you just always want to keep liquid. And it's not going to earn much, 3% or less. But emergency dollars are important, and I call it toe of the sock money. You just have to, forget that it's there.
Or does he have the ability to stuff that money into a tax deductible account of some sort and to get a tax deduction along the way?
Mm-hmm.
So as we said, there's all kinds of variables that have to be looked at. It's a nice situation to be in, but you want to know the facts before you go. And that's what financial planning is all about.
Right. I mean, it's a really simple question on the surface, but we have shown how complicated the answer could be because there's a lot of different variables. Right. And sir, if you want to hash this out with one of us, to help you make the decision as to what might be a better idea for you to pay cash for the house, put 50% down, put less down, feel free to give us a call, 407-869-9800. Take advantage of a complimentary consultation and hash out this topic for you.
That's what we do. So we have a text question there. Josh, take it away.
Absolutely. If you want to call in and talk to them right now live, we got open lines 844-580-9326, 844-580-WDBO. We got a question coming to us, and this one says, we got a lot of information on this one, so I'm going to run right through it.
Okay.
Question again starts now. I'm 52, and I've got most of my retirement savings in my 401k. I know I should probably be checking the investments in there once in a while, but honestly, I haven't touched anything in years. How often should I actually be reviewing that?
Well, I would think at least once a quarter. I understand a set it and forget it attitude, and if you're regularly depositing money into it, it's a great way to let things accumulate. But I would want to know, is this account are the dollars all invested in the exact same thing that was originally purchased when this person started putting money into their 401k? I'd like to know how much they're contributing into their 401k. Is it just to the match, or are they doing as much as they legally can deposit? And now a lot of 401ks have a Roth option as well as just the traditional option. I'm not a huge fan of target funds. I prefer, a lot of 401ks have now added ETFs into them, and that's my preference. So there's a lot of questions, just like the gentleman with the mortgage, that I would have for this individual to be able to answer the question. One of the things that we do for our clients is we manage their 401ks right along with all of their other investments. It's just a matter of them giving us access to the 401k. And when we do our quarterly reviews, we're pulling in all the current investment accounts that they have within there and checking the quality of those right along with everything else that we're managing for them on an individual basis.
I need a little bit more context to that. When you started down the path of that plan, or that putting them in plan, hopefully you had some idea of how aggressive or how conservative you want to be. And over time, as we've seen, the stock market is doing very well. So if you could be very, very heavily now in equities, and as you're moving more toward retirement, you want to scale some of that back. So you want to look at that. Secondly, you also want to look at the quality of the investments that you have in your plan. And this is one of the things that we do when we review things for our clients, is look at the quality of the choices that you have in that limited menu. And that's where Score My Funds comes in. It gives you an opportunity to have a objective look at the quality of what you have. And if you want to take advantage of that, you just go to scoremyfunds.com. It's scoremyfunds.com. We will send you a detailed report of the investments that you have in your retirement plan, and to show you exactly the quality of what you have, and you can make a decision of, in terms of quality, not necessarily in terms of allocation as to how much you should have in fixed income versus equities, but really the quality. That's where you want to start with, the quality. If you're holding junk, you want to know it immediately.
Right. And, someone who's 52 traditionally has about 15 more years to save. And that's an awful lot of time.
Yep.
So.
Yep. So appreciate the text question. You got another one there, Josh?
We certainly do. This one asks us, I left my old job about 2 years ago, and I still have my 401k sitting there. Is there any reason I should leave it alone, or am I better off rolling that into an IRA?
I see this so much where clients come in and they have, 2 or 3 or 4 old 401ks out there. You do not leave money where you are no longer. And here are the reasons why. First of all, the funds that are available within the 401k could change, and your investments that are just sitting there dormant would just change automatically, and you're going to find out about it after the fact. It may or may not be in an allocation that you are happy with. And most importantly, when it comes time to taking money out of your retirement accounts, if it's in a 401k, 403b, something like that, the minimum tax withholding is 20%. And if you're not in a 20% tax bracket, then you're going to be giving money to the federal government to use interest-free all year long. So I think that it is very important when you change jobs or you retire that you open up a rollover IRA and then move the assets from the 401k to the rollover IRA. The ones that we manage for our clients, the internal expenses on the investments are way lower than they are in 401ks. If the internal expenses are lower, then that's going to be more total return to the client. You're fully aware of what investments you have, and you can pick your tax withholding when it comes time to take withdrawals.
Bottom line, it gives you a lot more flexibility and allows you to marshal your assets into the direction in which you want to go for your retirement. But then Nancy said that we have oftentimes clients come in with 401ks, and there's some that they can't find. So if you can't find your 401k, you give you a website here. Go to lostandfound.dol.gov. That's lostandfound.dol.gov, and it may help you find that old 401k that you had years ago, and you never wonder what happened to it. So that may help that text messenger as well.
Found money is always nice.
There you go. I would open music. Josh, take it away.
If you've got a question, or maybe a previous question led to an extension of a question that you may be having, call in right now, 844-580-9326. Send in your open mic using the free WDBO app, or reach out to Charles Curry. Tell him you're listening to the show right now. He's taking calls off the air, available to you right now at 407-869-9800. We're listening to On the Money, where we're planning tomorrow, today, with the Certified Financial Group.
This hour was paid for by the host and does not reflect the opinion of WDBO. Now, the 3 big things you need to know, powered by Mark Spain Real Estate.
President Trump is defending his decision to pause tariffs on beef imports. Trump told reporters on Air Force One Friday that, quote, "We want to get the beef prices down, so we will get them down a little bit, and that's what the voters want." The U.S. Postal Service has issued a rule to restrict mail-in voting despite a court order blocking the move. Earlier this month, a federal judge blocked the Postal Service from enforcing a Trump executive order that would restrict voting by mail. And Indy cars will be racing on the streets of Washington, D.C. on Sunday for the Freedom 250 Grand Prix. The race will start and finish on 3rd Street in front of the U.S. Capitol and will include 7 turns around the National Mall for a total of 147 laps.
Traffic is a mess this afternoon because of a crash I-4 eastbound with 4 stuck on the highway. Wishing you could have avoided the headache. You can use Palm Parkway or Apopka Vineland Road to get past this and save yourself some time. Or maybe you were wondering when things would clear up. And as I'm looking at the cameras, the road ranger, well, he is finishing picking up the last cones there. We now have all lanes back open. Live traffic updates on WDBO.
Did you know that your home will go through probate if you pass away? Probate is expensive and people want to avoid it. Hi, I'm attorney Tom Olson, host of the Olson & Law radio show. At the Olson Law Group in Orlando, we are all about helping people to avoid probate. We have free booklets on easy ways to avoid probate. To get your free Easy Ways to Avoid Probate booklet, call the Olson Law Group in Orlando or go to our website, olsonlawgroup.com.
Skip the hassle of constant cleaning and costly repairs and sell your home stress-free with a guaranteed offer from Mark Spain Real Estate. Hi, this is Mark Spain, and our offers are the strongest in the industry. When you get a guaranteed offer from Mark Spain Real Estate, you can sell your home stress-free and avoid the hassle of costly repairs. There are no showings, no open houses, and no stress. Our guaranteed offer keeps you in control. One of our clients, Chris, said, Mark Spain Real Estate's guaranteed offer allowed us to sell our 16-year-old home without having to spend thousands on repairs. Their guaranteed offer was more than we were hoping for, and the whole process was fast. Don't worry about the inconveniences of selling your home. The guaranteed offer makes selling your home easy. I've been serving homeowners for nearly 30 years and have helped over 58,000 satisfied clients sell their home. I know what matters most, a quick sale and maximum profit. Find out what your guaranteed offer will be and close in as little as 21 days. There's no obligation. Go to markspain.com to get a guaranteed offer on your home today. That's markspain.com and start packing.
Lift up, Orlando. The biggest Kia event of the summer is happening now at Greenway Kia. With 3 Central Florida locations, that's over 1,000 new Kias, all priced clearly online at greenwaykias.com. And when you trade with us, over 40 Greenway dealerships bid on your vehicle, giving you the maximum value possible. Plus, bring us any trade and get an additional $1,000 off your new Kia. I'm Joe Rossi, and I want to see you in a Greenway Kia.
Let's talk about the Hey folks, it's Bruce Woodburn here, the Lone Ranger. We've helped over 10,000 families become homeowners. And I'll tell you something right now, it's a buyer's market. Sellers are offering closing cost credits. They're making repairs, and there's plenty of room to negotiate. That wasn't the case a year ago. Waiting for rates to drop? That's like waiting for gas to hit $1.25. Sure, it might happen, but how long are you going to sit on empty? Meanwhile, home prices just keep climbing. Marry the house, date the rate. You can always refinance later when the timing is right. And don't forget, I've got programs with zero down payment, low down payment options, and if you work with one of my vetted real estate agents, you can get up to 25% of your commission back in your pocket for closing costs. Folks, I'm not here to sell you. I'm here to help you win. Call 407-706-3313. That's 407-706-3313, or go to WeBringYouHome.com. That's WeBringYouHome.com.
A 10-foot cement fence.
It's got an edge back for S&W Kitchens. Something to keep in mind for the future, okay? If you're thinking about your current home being your forever home, it's going to be worth investing in that home and not living in a familiar environment.
You got it. Any particular one? We got 3, 4, and 5 left.
Special events that enrich all of our lives. S&W Kitchens will make these adjustments for you on your
Perfect. Number 3 it is.
word and WKitchens.com or call 407-487-4901. S&W Kitchens.
This October, experience an unforgettable evening of hope, compassion, and celebration at the Harvest Ball, meditating Lovey Rose Special Needs Dog Rescue and Sanctuary. Join us Saturday, October 3rd at Rose and Shingle Creek in Orlando for dinner, dancing, live DJ, raffles, a silent art auction, and an inspiring presentation by New York Times best-selling author and renowned canine expert Tamar Geller. Help give special needs dogs the second chance they deserve. Reserve your tickets today.
Reading your question there, Nancy, am I realizing that I made a mistake doing prepaid a few years ago?
RG. No, you're a miracle.
Because that wasn't one of the options.
From garages to global giants, Silicon Valley, a region in Northern California, became the engine of modern innovation. Companies like Apple, Google, Microsoft, and Intel helped reshape how the world communicates, works, and creates, turning American ideas into global influence. I'm Isaac Abdel-Messiah, and that's your America 250 moment on WDBO, Orlando's News and Talk.
This hour was paid for by the host and does not reflect the opinion of WDBO.
Start with the text and then go to workshops, right?
Okay.
Back to On the Money here on WDBO. My name is Josh McCarthy, sitting here with Joe Bert and Nancy Hecht, 2 certified financial planners with the Certified Financial Group. If you've got a question right now with about 3.5 minutes left, you might want to change your number that you're going to call in, because Charles Curry is taking your calls live off the air in a few minutes after this show comes to a close, and he's available to you right now at 407-869-9800. 407-869-9800. Just when Charles answers the phone, tell him you're listening to the show. and it got too close to 10 o'clock, so I wanted to call you instead to get that full answer. All right, what do you say, Nancy, Joe? We have one more question to get through.
Okay.
And this text question says, we have 2 kids, 8 and 11, and we're currently finally in a position that we can start putting money towards college, more money towards college. Should we be putting everything into a 529, or should some of that money stay in a regular savings account or an investment account?
Well, they have a number of years still for both of the kids to save. I think a 529 is a great way to pre-fund for college. All the money will accumulate on a tax-deferred basis, and as long as it's used for higher education, it could be anything from tuition to housing to a computer to books, then the money comes out tax-free. So I think it's a great way to save.
I'd also consider the Florida prepaid. If you don't have that in place, maybe consider that as a supplement to the 529.
And that will lock in tuition costs, which is great because tuition is a huge part, although books and housing is also a huge part. So a combination of the two is a great way to do for your kids.
So we're wrapping up the program here, Nancy. We've got a workshop coming up a week from today here at our offices at 10 o'clock.
Yes. August 29th, this one is How Savvy IRA Planning for Boomers, Strategies to Help You Save Taxes and Get More Out of Your IRA. This is hosted by Charles Curry. As Joe said, it's August 29th from 10 to 11:30 here in our offices. If you go to our website, financialgroup.com, there is a workshop tab. Please make a reservation. The workshops fill up fast. Light refreshments will be served, and a lot of good, plain English information will be imparted to help you have a successful retirement and pay taxes.
Yeah, we won't be talking about annuities. Unless you ask a question about annuities, then we're glad to answer that for you. So once again, it's absolutely free. Go to our website, financialgroup.com. That's financialgroup.com. Pull down the workshops tab, and you make your reservation right there. We hope to see you there. And people ask Joe, why do you do these things? You do it for 2 reasons. Number one, to hopefully prevent you from becoming a financial casualty. And secondly, to introduce you to what Nancy and I and the 14 number certified financial planners do for our clients, getting them to and through their retirement years. And this way, whether you need our services now or sometime in the future, you'll give us an opportunity to earn your business. So that's financialgroup.com, everything you need to know. And if you want more information about your funds I mentioned earlier, go to scoremyfunds.com.
That's what I was just going to talk
Go
about.
ahead.
Yeah. No, it's a great way to get some good quality information on your funds. And you could put in the ticker symbols to up to 20 different mutual funds.
There you go. All right, Josh, take it away, buddy.
Thank you so much. Thank you so much, Nancy Hecht and Joe Bert, 2 certified financial planners with the Certified Financial Group. Charles Curry taking your calls live off the air right now, 407-869-9800. 407-869-9800. You just listened to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.
Okay. That was good.
Restroom and then
Okay. All right. Have a good one. Bye.